Hi, my name is Brad Rosley. Thanks for tuning in today to Smart Money. As a certified financial planner, the purpose of my video series is to help educate people about basic financial information that they can all use and benefit from. I hope you subscribe to my channel and take a look at the other videos I've already produced and the ones I will be going forward. Today's topic is life insurance. There's two types, term and permanent. Most people don't know the difference. Well, I'm here today to make it a little bit easier for you. Term insurance is renting insurance. It's true insurance. Permanent insurance is really financing to own. And we'll get into that after I talk about term insurance. Term insurance is the most affordable, most popular type of life insurance. It is true insurance. You pay a premium to the insurer, and if you die, your beneficiary will collect the benefit. However, the insurance runs out. Most people, when they buy term insurance, they buy it for a period of years. Maybe it's for 5 years or 10 years or 20, sometimes even 30. And they pay usually a flat level rate for the period of time. So let's say you were 40 years old, you had a couple kids, and you have income, and if something were to happen to you, you'd love to have a lump sum of money for your surviving spouse to invest or pay off a mortgage or something like that to replace your income if you happen to die young. You'd buy maybe a 20-year level term insurance policy. You pay the premiums every year, and if you happen to die during that 20-year period, your beneficiary would collect the death benefit, which, by the way, is income tax free. Now, what happens when you don't die? Because if you're healthy enough to get the insurance at age 40, let's just say, or any age for that matter, the insurance companies aren't stupid. The chances of your dying young, although some people do, is very, very, very remote. If you already have sky-high blood pressure or some other problem, medical issue, if they're going to offer you insurance at all, they'll make you pay extra for it because maybe your life expectancy is shorter than someone that doesn't have that condition. So you pay a fixed level of premium generally for term insurance for a fixed period of years. After that period of years, so let's fast forward, and now you bought it at 40, now you're 60. Well, that same $500,000 of insurance, now that you're 60 or now 61, the price of insurance is going to skyrocket. It's going to be a multiple. If it was $1,000 a year, now it's probably going to be $5,000 a year or some other number. That's just pulling out of there. My point is it skyrockets. And from 60 to 70 to 70 to 80, the prices just go through the roof. So guess what happens? The people that buy term insurance seldom have a claim on it. Matter of fact, 98% was the last number I saw in a study. 98% of term insurance policies are never claimed on. Now that's not bad. That's probably even a larger percentage than those who don't have a liability claim on their auto insurance. The difference is life insurance, people do die. Everyone dies. Everyone doesn't have a liability insurance claim on their auto. So you may want to structure it such that when you do die, there is an insurance policy in place for you no matter when that is. And that's where permanent insurance comes in. Permanent insurance is really not insurance at all. Because by definition, insurance has a chance of there being a claim and a chance of there not being a claim. In most cases, it's a far greater chance of having no claim at all. Just like your fire insurance, your auto insurance, any other type of insurance you may have. But with life insurance, we're guaranteed to all have a claim. We just don't know when. So what permanent insurance is, it's really a payment you're making year in and year out, and you're funding a future asset. The asset being the tax-free death benefit that someone will one day get when you pass away. You just don't know how much you're going to pay into it or how long or when you're going to get the death benefit. Modern policies allow you to structure your premiums to permanent policies. People have heard of whole life policies. Well, that just means you're paying in a ton of money up front, and you have so much money going in there up front that you could literally stop paying your premiums probably after about 7 years and keep the insurance for as long as you live, that same death benefit. And if you keep paying the premiums after that part, the death benefit will start rising automatically so that it becomes an even better return on investment over time. There's many, many other types of permanent insurance programs. Think of it like a mortgage. You can get a 15-year or a 30-year or a 10-year, lock it in and be guaranteed. Now the downside is it's expensive. You're funding a future asset. Imagine how much money you'd have to put away over a 15-year period of time to know that it's going to grow and be $500,000. That's being what the death benefit is down the road. It's going to be a substantial amount. However, if you decide, well, geez, I can't afford that at 15 years, what if I put that money in over 30 years to get to my $500,000? Well, then it's going to be a much smaller number. So again, this was just a quick summary of the difference between term insurance. Term insurance is rented. It's inexpensive. It's a great vehicle to insure your income if something were to happen to you, especially when you have dependents. Permanent insurance is permanent. It's made to be the best wealth transfer vehicle you can find because it's income tax free and it becomes available right when you die. You can do both. You can have some of each. But term insurance is renting and permanent insurance is financing to own. I hope that helps. If you have any questions, feel free to reach out to me. I hope you subscribe to my channel. That would be great. I have a lot of videos already on the channel talking about different financial topics, and I will continue to post videos on new and exciting financial topics that I hope you can learn from. Thanks a lot for listening. Have a great day.